Hello and welcome to the Faces of Melrose Real Estate. Thank you for joining us last month when we talked about selling your home from a seller's perspective. And this month we're going to focus on preparing a buyer to purchase a home. My name is Jean McAndrews. I am here with Christine Rocha from RE/MAX Leading Edge, Chris Cower from Patriot Community Bank, and Lou Izzy from Bell & Izzy Law Firm. Our vendor spotlight for this episode is Alastair Drummond from Humboldt Storage Moving Company. And Christine?
Thank you, Jean. So the last time we met, I started off by talking about the market and what it was doing. So just to kind of give you a quick overview, in Melrose, in January, we had 14 active single-family homes on the market. As of today, and even though some properties have gone under agreement and new properties have come on, we have 16 active single-family homes on the market. So it's still very much a seller's market today. So from a buyer's perspective, what does that mean? It means crowded open houses, it means multiple offers, and potentially bidding wars. So it's really a time to be creative and flexible when writing offers. We have a lot to cover today as far as materials. So I'm going to get right into my segment of it when somebody calls me, a buyer calls me, and they're interested in purchasing a home. I always recommend a buyer consultation, which is a chance for the buyer and I to really sit down and kind of go through the process, talk about the market and what it's doing, give the buyers a chance to ask the questions that are on their mind, and really a chance for me to listen and get to know what's important to a buyer, on the house that they're looking to buy. The first thing I really start with when it comes to a buyer consultation is what role does a real estate agent play? There are really three, and that can be a seller's agent, a buyer's agent, or a facilitator. Now, if you're working with a seller's agent or a buyer's agent, then they work with clients, meaning that the seller and the buyer are their clients. A facilitator, if you're working with a facilitator, then you are a customer to the facilitator, meaning that they really don't have a tie to the buyer or the seller. When you are working with a real estate agent and you are a client of the real estate agent, basically you are owed loyalty, you're owed confidentiality, reasonable care, lawful obedience, disclosure, and accounting. And those are all very important when it comes to real estate transactions. Now, if this is very important for a buyer, if you walk into a home and you are meeting with a real estate agent, and that agent happens to be the person whose name is on the sign in front of the house, then you do need to realize that you're speaking with the seller's agent. And what that means for a buyer is that the seller's agent is there to sell the house in the shortest amount of time and for the most amount of money for the seller. So they're there to promote the seller, and that's an important piece that a buyer needs to realize. Now, people will ask me, well, why would I want to work with a buyer agent? And there's really a couple of reasons for that. Well, more than a couple, but a couple I'll point out right now. First and foremost, it gives you a level playing field with the seller, because the seller has a professional who is marketing and negotiating and moving that transaction along for the seller. The buyer should have the same type of representation. A buyer agent will not only facilitate the process, meaning they will schedule showings, they will write offers, they will attend home inspections and help with financing and really get you to the closing table. They'll do that, plus they'll also educate you. They'll educate you on the market, they'll educate you on property values, they'll educate you on, and especially in this market, multiple offers, how to win a bidding war. They'll help you with negotiation. They'll connect you with a strong team of people that will help you get over the bumps that sometimes arise in real estate. And finally, they'll get you to the closing table. So they're really with you from start to finish and beyond.
So what kind of qualities would you look for?
Okay, so when you are looking to perhaps hire a buyer's agent, there are some things you should keep in mind. First, not all real estate agents are realtors, and I think it's important that you work with a realtor. Reason being is that a realtor is a member of the National Association of Realtors, and they abide by a strict code of ethics and standards of practice. And just as an example that you might be able to relate to, when you walk into an open house and an agent asks you if you are working with or under contract with an agent, the reason for that is that as a realtor, we cannot interfere with an agent-client relationship. So we really need to know who it is that we're speaking with. Real estate changes so frequently that I think you really want to look for someone who is in it full-time and really is in it 24/7. It's that important to keep up with what's been going on in the real estate market. You want somebody who's knowledgeable. You want somebody who's accessible. You want somebody who can communicate with you. You really want somebody who you're going to connect with as far as that goes. And again, as I mentioned in the beginning, I think it's very important for that buyer consultation. You want to work with an agent who's willing to sit down with you in the beginning and really give you a good overview of the process, because there is an awful lot that goes on. And it's that consultation is just the start of the learning process.
So any tips or advice?
Tips or advice, yes. So especially in this market, and I think that's what I'll focus on right now, because there's such low inventory, because if a house is priced right, if it's in good condition, if it's in a good location, it's going to go quickly. First and foremost, you should have your team in place. And when I say team, I basically mean your real estate agent, your lender, and your attorney. First and foremost really is probably the lender, because you do want to have a pre-approval. And there's a lot that goes into it as far as that goes as well, and Chris will talk about that in a few minutes. But you really do want to have those people in place, because once you find the house, you want to be able to move forward as quickly as possible. Again, taking the market into consideration, because we don't have a lot of new inventory coming on. I think it's important that, especially if you're a new buyer to the market, go back and look at the old inventory that's out there. Again, if a house is still on the market, it really is because of one of those three things: location, price, or condition. So maybe the seller now is going to be negotiable, as far as their house has been on the market for a little bit. So it's a good opportunity for a buyer to go back. I know everybody wants to move into a move-in ready home, but if you look at a house and if you can see it through the eyes of somebody who can go in and remove the shag carpet and take down the wallpaper, paint some fresh colors, maybe take down the wall, that's easy enough to make that open flow concept. A little sweat equity is really going to gain you some cash equity in the end. The other thing I might suggest, and a lot of people aren't cut out to be landlords, but if you think you are, a multifamily opportunity could be another good opportunity for you. Someone helps pay the mortgage, and then when you're ready in a few years to move on, you could always hold on to the property for an investment. I think the final thing that I'd say, and I always talk about this in a first consultation as well, is don't be afraid to make an offer. If you know what you're looking for in a home, if you have a good idea of location, if you know what's important to you, and you go out the first a couple of times, and you see that home that ticks off most of those boxes for you, don't be afraid to put in an offer. A lot of times people will think, well, if I found it this easy and this quickly, there must be many other houses out there for me to take a look at. And what happens is we spend the next 6 months really looking for the same house that we just passed up on. So I'd say that would be my final suggestion is don't be afraid to make an offer. Now I think maybe we'll jump over to Chris and talk a little bit about the financing piece. Like I mentioned, as a team, it's really important, and depending who you come to first, lending is definitely something that needs to be right up there on the ladder as far as that goes. So when it comes to somebody looking for a mortgage, Chris, in considering a house purchase, what would be the first steps maybe that you'd consider?
Well, first of all, thanks again for having me here.
Absolutely.
I couldn't agree with you more. I think the most important piece is to make sure you surround yourself when you're a buyer with a good team.
Yes.
And as you mentioned, a good real estate professional, a good attorney, and a good lender. Those are really the key pieces in being successful as a buyer. And from the mortgage point of view, I always feel the first thing that any potential buyer should do, unless you're a cash buyer, is we need to get a mortgage. We're going to have to finance that property. So you really want to concentrate on, first of all, finding a good lender that you can work with, one that has many different products and programs, one that offers good service, competitive interest rates, and again is there for you to match you up with the right mortgage. And then from there you want to get what's called a pre-approval. The pre-approval process will allow you to understand what your monthly payment is going to be on that house. how much you can afford, what type of homes you should be looking at, what price ranges you should be looking at. And then also, will that monthly payment fit into my budget that my family has, and can I afford it, and can I get approved for it? Many times by doing this early in the process, something may be uncovered, like when they do the credit check on you, there may be something on your credit that needs to be corrected. That way you can work on correcting those things before you're out looking at homes, so that you'll have a chance to correct that thing versus going in and applying for your mortgage once you've found a house and having to worry about that at that point. So really the goal of it is to get a good pre-approval, understand what mortgage is the right one for you, because there's many of them out there, understand what the cost will be, and then have that pre-approval letter in hand so that you can really just focus in on the property and finding just the right house that's right for you guys.
Perfect, perfect. When somebody is out shopping for a mortgage, what are some of the things they should be aware of?
Well, that's a really good question, especially now today. We all aware of the financial crisis that the country went under over the last 5 to 7 years.
Absolutely.
And what came out of that is that most mortgage loan officers like myself are fully licensed now with the National Registry. We had to go through testing, continuing educational processes, and things like that. So the level of professionalism from the people that are getting consultations with mortgage professionals is much better now. So that process has improved. Again, the lenders that are out there really need to offer you a wide variety of products. You want somebody that has different types of products, whether it's a fixed rate, an adjustable. There's many home buying programs like Mass Housing, FHA, and things like that. There's loans for veterans. So you want to be able to understand what products are out there so that you're getting the one that's just right for your family. The other thing that's important to understand when you're going out and looking for a lender is the difference between a mortgage lender and a mortgage broker. Both of them are good and both of them provide a good service. The main difference is that a lender, it's their money that they're lending it. So they originate, process, and close the loan, and they're the ones that actually put the money on the table at the closing.
Okay.
A broker's job is kind of a go-between where they take your information and then provide it to a lender and to try to match you up with the right mortgage as well. But they can't issue a pre-approval without getting the lender approval, for example. But again, they have a variety of different lenders that they may work with as well. So that's the main difference between the two. So again, you just want to make sure you're working with someone that provides good service, has competitive rates, and then can match you up with the right program and educate you about the process, because they're really going to be an important part of that team.
Absolutely.
As you go forward looking to buy a house.
Absolutely. All right, thank you. Any tips you can give a potential buyer when it comes to the pre-approval process?
Yeah, sure. Lenders are going to want to get your basic information, your name, your address, your social security number, things like that. They're going to want to understand what your income is and the source of that income. They're going to want to check your credit and go over that with you. They're going to want to understand your assets, how much money you have in the bank, and how much of that you want to commit to a down payment. There's programs that offer very little down up to, as much as you want to put down. So again, it's a matter of understanding that and providing that information for the pre-approval. And then whether that you find a house 2 weeks later or 2 months later or 6 months later, then it's just a matter of keeping that information up to date.
Okay.
And then when you find a house, if you've done all that right, really all you need is an appraisal. You may need to update some of that information, but you really just get an appraisal of a property. And again, you're more focused on just the house at that point because the finances have been all set up and you have a good understanding of it. So you want to have that ready when you're going in to get a pre-approval. If you're self-employed, you may need a couple years of tax returns, your 1040s. You may need a letter from your accountant to understand what the impact of that and that your company is still thriving if it's mid-year. Doesn't happen all the time, but that may be something that's required of a self-employed borrower.
Okay.
Pay stubs, bank statements, things like that.
All right, good. What about the mortgage rates? What's going on with those right now?
That,
I know.
right?
We had to throw that in.
Yeah, sure. No, it's definitely the number one question. The good thing is that here we are at the end of February, in March. Interest rates right now are actually lower than they were a month or so ago.
Okay.
So it's lower than it was back in December and January. That's a good thing. We kind of got a little reprieve here. The government has started slowing down some of its buying of the mortgage-backed securities, but it's nice to see that the consumer, GQ Public has stepped in and started buying some of those securities as well.
Okay.
So it's allowed mortgage rates to stay the same or go down in many cases. And the economy really hasn't picked up that much steam as they hoped. So again, bad news on the economy is kind of good news for interest rates in a way.
Okay.
So right now the typical 30-year fixed rate's about 4.25. The 15-year fixed rate's about 3.25, in those ranges right now. And again, historically, those are extremely low interest rates, and it's a great time to buy a house.
Last question. As far as money that a buyer needs to bring, so besides the down payment, can you tell us a little bit about costs and fees and that
Sure.
type of thing?
You know, let me start out by saying that when you're shopping around for a rate, it's very important. It's a big deal to buy a house. You know, it's probably one of the biggest financial transactions that you'll
Absolutely.
do for your family. So even if you're pre-approved with somebody, you always want to make sure that you're getting a good deal from you know, shopping around and making sure that the rate that's being offered is a good rate. You need to also understand what the costs are, like you said, that are associated with that rate. You may have one lender that has a rate of 4%, but the closing cost may be $7,000. You may have another lender at 4%, and their cost may be $3,000.
Okay.
As a standard rule of thumb, closing costs range between $2,700 to $3,000.
Okay.
That's pretty standard in the industry. And that covers things like the attorney fees. It covers things like the appraisal, the credit report, the recording fees at the registry of deeds, the things that the lender needs to do to get you your mortgage and securitize it and make sure that you have that deed in hand and it's your house. Those are the typical costs. In addition to that, you have 3 months worth of taxes, could be 5 months, could be 2 months, depends when the next tax bill is due. You need a couple of months of homeowners insurance, hazard insurance.
Okay.
So you need to be prepared to do that as well on top of your down payment.
Okay.
In addition to that, there's a thing that's called home owner's title insurance. That's optional. It's not required by the lender,
Okay.
but we include it in the cost up front, even though we don't require it, because if a buyer does want to buy that, it's a policy issued to them as a new buyer of the house. It's not associated with the mortgage because it's a policy to them. Usually, you know, we will have a buyer, you know, consult with their attorney to see if that's a good idea on this property. I highly recommend it. You know, it may add a thousand or two to the cost, but again, if you spread that over owning the house and the peace of mind, again, I don't know if Lou, if you
No,
have.
it's a good point that you bring up, Chris, because especially for first-time home buyers who maybe haven't gone through the process in the past, as many of us were when we first decided to buy our home, you're looking at every dollar being spent. And for many buyers, they look at that as an option. And it is an option, but it's something that I highly recommend because even though the closing attorney is required to certify that you have clear and marketable title to the property, there are mistakes that occur. That's why the bank requires a lender's policy, because the banks know that there are issues that arise with respect to one's quality of title, and they want to be protected. And so they require that the buyers pay for that policy. The owner's policy then protects the buyer's interest, the buyer's equity, so to speak, in the home. And that covers a buyer for as long as they own the home. So it's very important that you know, buyers, especially first-time home buyers, don't get into the position where they're penny wise and pound foolish, where they sort of cut back on that expenditure, only to realize down the road that if a mistake was made at the registry of deeds, for instance, there's no recourse for them. But the title insurance will step in and protect their interests. And we can talk about that more later. But I appreciate the fact that you bring that up because it is something that's very important.
It's funny how, you know, we'll spend $1,500 on a car insurance policy, but sometimes,
Exactly.
you know, we won't want to spend that for a house that we'll have for a long time. But
Right.
anyway, again, you know, it's a good topic to discuss with, you know, your team, your legal counsel about owner's title. But that will add a little bit of cost if you
Okay.
want that. But from a lender's point of view, that's optional. So that's about what they'll need for closing. The good part is that during the pre-approval process, every buyer should get what's called a good faith estimate. And sometimes during the process, I've issued 3 or 4 or 5 of those based upon different loan scenarios. That way there's no surprises.
Okay.
Those costs really need to stay the same throughout the whole process. And there's federal laws are out there now to, when we do issue a good faith estimate, that it really has to mirror what the costs are at closing so that there's no surprises. Someone really shouldn't come to a closing and say, wow, my costs are much higher. Those days should be gone, and a good faith estimate is what you want to look for well ahead of time so that you know what your costs are going to be and you'll have no surprises.
Wonderful. All right. Well, thank you, Chris, very much.
Thank you. Thanks for having me.
Welcome back. And now we have Alastair Drummond from Humboldt Storage and Moving Company.
We're very fortunate to have Alastair here with us this evening. He is a global sales consultant with Humboldt Storage and Moving. He is a Melrose resident, member of the Melrose Running Club. He speaks fluent Spanish and French, and he also produces a jazz show on the internet. So very interesting. Welcome, Alastair.
Thank you very much.
You're welcome. And if you could, why don't we start off now? You know, our whole segment has been on buyers and you know, moving on. So if you could, why don't you give us an overview first of Humboldt Storage and Moving?
Certainly, and thank you very much for having me in. Humboldt Storage and Moving is a family-owned, third-generation family-owned moving company, and we've been moving people since 1905. Okay. We move household goods, automobiles, fine arts. We also do laboratory and office moving. Each year we do upwards of 3,500 moves worldwide. So we do local, interstate, and international moves. And we are a United Van Lines agent. And within this country we have we're part of a network of over 700 agents. And worldwide we have a network of over 1,100 agents. And in addition to moving, we also take a very active role in the community, supporting nonprofits such as Special Olympics, Toys for Tots, Move for Hunger, and More Than Words, and Furnishing Hope, among other nonprofits.
Very nice, very nice. All right. When someone is looking for a mover, what are some of the things that they should look for?
Good question. And there's a lot of things to keep in mind. First, if you're moving locally within Massachusetts, within this state, you should check that the mover is licensed with the Mass Movers Association. Okay. Also check to see that the mover has been assigned a U.S. Department of Transportation number. Another thing to check on is to see if the mover has been licensed by the Federal Motor Carrier Safety Administration, known as FMCSA. The more research that a client can do, the better. And we recommend, for example, that they go to a website called movingscam.com. This website kind of, if you will, kind of gives a report card on movers. It's also a good idea to check with the Department of Consumer Affairs and with the Better Business Bureau to see if there's any outstanding issues on a company, you know, anything that perhaps that you didn't know and that you really should know about a company. With regard to documentation, every mover should give you a pamphlet called Your Rights and Responsibilities When You Move. And this is our version of that. It's a little booklet, and what it does is it gives you answers to frequently asked questions about moving. It also will give you a definition of moving terminology and moving words that perhaps expressions and details about different types of quotes and all that sort of information. So that's all in the rights and responsibilities. And as the name implies, it'll also tell you what your rights are in the event any of your goods are damaged or lost. Additional documents. Every mover should give you, of course, a proper printed estimate. And the estimate is a list of services and the charges associated with them for your move. Okay. Another document that all movers should provide you with is called an order for service, which in some respects is your permission for the mover. A signed order for services is your permission for the mover to come in and move your goods. It also describes all of the services the mover is going to do, and it confirms the date of pickup and the date of delivery for your move. And another document which is important for every move is a bill of lading. There's local bills of lading, and there's international bills of lading, and there's long-distance bills of lading. The bill of lading is a contract between you and the mover. And it also serves as a receipt. Once your goods are on the truck and they're on their way, this is a receipt for your goods, and it's proof that your goods were picked up on such and such a day, and they're on their way. And a filled, completed bill of lading should be given to you before your goods go on the truck. And for any long distance or international move, finally, you should get an inventory. which of course is a description of all the things that you've just had moved. A description of the contents of the boxes, the condition of a piece of furniture, and very important that you're in agreement with the descriptions the mover makes on the inventory about a piece of furniture. For example, they may say, the table's worn, it's rubbed, it might have a scratch. As long as you have, if you have any questions, as long as you see what they're talking about, so that this table arrives at the destination in the same condition it is now,
Okay.
then that should satisfy you. So just an insight into some of the documentation, some of the obligations the mover has.
Okay, wonderful. Now, do you actually go out and visit the homes if somebody was to call you and want to hire you or talk to you about moving their house?
Right, absolutely. We
Okay.
recommend, first of all, that people get more than one estimate.
Okay.
It's always a good idea to get a few different perspectives, compare services, compare charges. When I go out to a home, I started a few years back with the clipboard and pen, and now we use an iPad, and it's just a much easier way to give
Absolutely.
people a quote. So we'll go through someone's house in the course of maybe a half an hour with them, detail room by room, furniture, boxes, packing, and then in the course of that 10 minutes after going through a house, we can already give them a quote right in their kitchen, on their kitchen table.
Wonderful.
So by all means, there's that, and it's amazing to me in this day and age that people still rely on phone quotes. We absolutely recommend that you don't make your decision on a phone quote. Have a representative out to your house, because you can see so much more, in person than you can describe.
Okay. Is there anything about, I guess, a person moving? Is there anything they should do to prepare for your visit to make it easier?
Well, actually, the first thing they should do is to just make sure you're very clear on what you want to ship and what you don't want to ship.
Okay.
And then you might have a few things that are maybe, there might be a maybe list.
Okay.
So, I often have people ask me, oh, what would it cost if I add, the sofa and the jacuzzi and the pool table? But seriously, just be very clear on what you'd like to move.
Okay.
And also be clear on things that you, especially for local moves, people like to quite often drive items over in their car, like sensitive electronics,
Sure.
computers, maybe really fragile things, pictures, frames, and valuables, personal effects. So make sure you're clear on what you want the mover to do and what you're going to do first.
Okay. All right. Any tips or advice?
Moving tips.
Moving
There's-
tips that you can
There's
share with us?
There's a lot of things to include in that category.
Okay.
But some of the basics. We were talking about preparing for a move, and another thing you should do is to. I often will tell people before a move, you may want to put things that you don't want to include in a move in a particular room or particular area of the house.
Okay.
It's always a good idea, because then when the movers arrive, they know they don't even have to go near those items. Those are definitely not going. So arranging the house for a move. Also, make sure you've all the contact information for the mover and that they have your information. Emails, cell phone numbers. If you're going to stay at a hotel in between the origin and the destination, tell us where you're going to be so we can keep in touch with you. If you decide to pack some things yourself, make sure it's non-fragile. At least we advise that for insurance purposes. Because if you ship a box that you've packed with fine china and something breaks, we don't know how well it was packed in the first place. So just some basics there. When the crew arrives at your house, they'll go through the house with you to identify what you want them to move.
Okay.
Also very important, before the truck leaves at the end of the day, to go through with one of the members of the crew again, because you want to make sure nothing's been left in a closet, in the attic, in the basement, or in the tool shed. It happens from for nobody's fault, but these are things that really assure that they've got everything for you. They'll give you a copy of the inventory, and also we also like to include, when we visit with people, a list of things to look out for prohibited items and things to avoid, like perishable foods and aerosols and anything under pressure. So just a few basics. Also, make sure you drain any equipment that may have fluids in it, like a lawnmower, a chainsaw, and clean them really well too. And finally, check with your insurance company. Your homeowner's policy may have a provision for moving your goods, your household goods. I just had a client check on their homeowners, and sure enough, it was covered in there.
Wonderful. All right. Well, thank you so much. We
Oh, well,
appreciate
thank
your
you.
time
Thank you very
tonight
much.
And all your good advice.
Oh, well, thank you. More information at Humboldt.com.
Absolutely.
Welcome back. And now we're going to turn it over to Lou Izzy from Bell & Izzy Law Firm.
Hey, Lou, how are you today?
Good, Christine. How are you?
Good,
Hi,
good.
Jean.
Hello.
Lou, buyers have so many options right now when it comes to purchasing a home. They have a traditional purchase. They have a for sale by owner. They have a short sale. They have bank owned. Any suggestions or anything that a buyer should be aware of, any different than another type of one purchase compared to another?
Well, I think, in this market, it's very intense, as you know, from a buyer's perspective. So although we do occasionally see for sale by owners, those are few and far between these days, and I think we all know why. We touched upon that during our last show with respect to the fact that sellers need to be represented by professionals, just as buyers do.
Absolutely.
Short sales, thankfully, have sort of tailed off in the marketplace, but they're still out there. And so for those buyers that aren't familiar with what a short sale is, that's a situation where a property is being marketed and the sale price is not going to be sufficient to pay off the outstanding mortgage or mortgages. And so that can tend to be a rather lengthy process depending on the situation. And short sales, more often than not, are anything but short in terms of the length that it
Absolutely.
takes, the time that it takes from the time that you get your offer accepted until closing, simply because you need third-party approval, and that's the lender. Traditional purchases, of course, are relatively straightforward, but they also offer the most, I don't want to say volatility, but the most pressure sometimes, because as you mentioned earlier, you're in a situation where this inventory is so low.
Yes.
Properties that are desirable and priced right are creating bidding wars. And so from a buyer's perspective, you want to make sure, as you've touched upon in the past, I know that it's somewhat repetitive, but it's so true, you want to make sure that you have a good team in place to handle those situations. So with each of those types of properties and the types of sales that are taking place, I think each has a different nuance, but I think the clear message is have good representation, have a good lender in place so that your finances are set and it makes you as a buyer most attractive to a potential seller.
Okay. When you think about, because now with the market that we're in, and like we had mentioned, the low inventory and possible multiple offers, people getting creative and flexible on their offers, trying to stand out from the others.
Sure.
My question for you was around escalation clauses.
Okay.
How do you feel about escalation clauses?
Very hot topic these days,
Yes.
as you know. Escalation clauses have a unique place in our market, and I'm seeing them more often. From a buyer's perspective, if a buyer is intent on purchasing a particular property, what an escalation clause does is, in its basic form, says, I, buyer, will pay X amount above the next highest bona fide offer. And that is a very powerful document when you think about it, because the contract to purchase is just that, it's a contract. And so what the buyer is saying, that they're committing to bid a certain amount to pay a certain amount of money over the next highest offer. I encourage my buyers to tailor that type of provision exactly as they need it to be tailored. And what I mean by that is, if they have an outside limit, they need to state that.
Right in the offer.
Right in the offer,
Okay.
I think. Because it's important that there not be any misconceptions regarding that offer.
Okay.
And I also think that a buyer needs to have the ability to review that next highest bona fide offer, so as to ensure that there is in fact a comparison of apples to apples, that there aren't any other contingencies attached to that other offer, and they're forced to then bump their price up based upon it. So it's very important. It's a good opportunity for buyers, or I should say it's a useful tool for buyers if they're desirous of a particular property and they want to set themselves apart. But it also needs to be used very carefully and the language tailored to meet their specific situation.
Okay, thank you. Home inspections,
Yes.
another issue.
Yeah.
What about negotiations on a home inspection? Any suggestions? What's kind of permissible? What, you know?
Sure. Yeah, I think in home inspections are those types of things that really cause a lot of anxiety, both for buyers as well as for sellers.
Absolutely.
But I believe that if a buyer sees a property, perhaps goes and views a property and then places an offer, the home inspection is used to present that buyer with a picture of that property. The systems, are they functioning? Things in good working order, the roof is sound, etc. I believe that if the home inspection reveals issues that a reasonable buyer could not have seen during a normal walkthrough, because they were hidden in terms of, it's a system issue or it's relative to the electrical panel or things like that, something that an ordinary buyer wouldn't have any cause to recognize or to be concerned with. If it's one of those items, if it's something that is of significant value, meaning it's going to cost a lot to repair,
Yes.
and if it's something that needs to be done within the first year of home ownership, I think under those circumstances, it's well within a buyer's rights to then talk with their agent and try to negotiate either a repair or a price concession. I don't believe that a home inspection should be used to renegotiate the purchase price. I think that that's not warranted. It's truly unfair to everyone involved.
Absolutely.
If something is visible and you can see it, if the stairs are broken and you walk over them to get into the property to view it, you can't then turn around and point out that the home inspection revealed that these stairs were broken and we want $1,000 off. I don't think that that's appropriate. And so I counsel my clients along those lines. But typically, as you well know, usually the conversation takes place between the buyer and their agent, the buyer's agent.
Absolutely.
And then that level of negotiation is handled usually with the brokers.
What do you think about seasonal items when it comes to, again on the home inspection, but air conditioning, for instance, and not being able to test it in the winter?
Well, that's tricky. It is tricky. Typically, I advise my clients to talk with through the brokers, talk with the sellers to determine, whether or not there was if you can't talk directly with the sellers, but look at the seller's disclosure to see if there's any type of information with respect to those items. See if they have a company that services that particular property, and then they can contact the company to determine whether or not they've done periodic testing and so forth. But in terms of keeping a contingency viable for post-closing, it's a very difficult situation to be in. And oftentimes you just have to do the best you can to inspect the unit or the system, and then rely upon your professionals to give you some sound advice.
Purchase and sale, when it comes to the buyer's point of view.
Yes.
Yes.
So purchase and sale agreements, I should have probably mentioned earlier that the offer to purchase, the contract to purchase, once it's signed by all the parties, becomes a binding contract because it contains all of the essential elements of the transaction. It contains identifies the property, obviously, it contains the purchase price, contains a closing date, and very often contains any financing, but that's not essential to the terms of the transaction. So if that document is signed in its most basic form, the parties can be held to that document, to that contract. It's more risky for a seller to be put in that situation than it is for a buyer, because typically at the offer stage they've only deposited $1,000. But I always encourage my clients to have, to the extent I can, have me involved as early as possible, so that the parties all know that that preliminary document is just that. It's just a document that sets forth the business terms. And the parties understand that there's going to be a purchase and sale agreement that they negotiate and sign at a later date, which will be the binding contract between the parties. So from a buyer's perspective, the vast majority of those documents, the purchase and sale agreements, are drafted by sellers, their counsel, or the listing agents, and they are invariably slanted in favor of the sellers. And so from a buyer's perspective, you want to have that document reviewed and tailored not only to your transaction, but also to be protective of the buyer's interests, to even the playing field, so that a buyer is not being obligated to do something that he or she otherwise shouldn't be obligated to do, and so that, again, there is an even playing field and that their rights are protected. So it's really very important, as you know, to have the purchase and sale agreement reviewed by an attorney and negotiated on behalf of a buyer.
Financing. And I know we've talked a lot about financing now.
Yes, Chris did a good job of covering that topic. I learned a lot.
Fantastic job. Clean commitment. What does it mean to have a clean commitment when it comes to?
Chris is going to be upset with me. That having been said, I mean, when a buyer is going to purchase property and they are getting mortgage financing, built into the contract of purchase or the purchase and sale agreement is a mortgage contingency date. So that's the date by which the buyer has to receive a commitment from Chris or whoever they're using in order to ensure that that the bank is committed to lend to the buyer on that particular property. And so there's the window of opportunity there. So if something goes wrong with their financing, well, then we have an opportunity from buyer's perspective to terminate the agreement for failure to obtain financing, and then the buyer is able to get his or her deposit back. Okay. If you go beyond that point, and for some reason the financing does not come through, there are sad circumstances, in which that does occur. Well, then the buyer's deposit is at risk and can be retained by the seller as liquidated damages. So at that mortgage commitment date, we want to ensure that the lender has provided the buyer with a clean commitment. And when I say clean, I refer to those things that that the buyer has control over. So for instance, if the commitment letter issued by the lender states that it is subject to verification of buyer's employment, providing last year's tax return that shows income of X, things along those lines, things that the buyer knows, well, I can produce that. That's not an issue. I know that I was employed, and I know that I am employed, and that's not a problem. I know that I earned X last year because my W-2 showed that, and that's what I paid taxes on, so that's within my control.
Okay.
If there's something that's not within a buyer's control, I would say that's not a clean commitment. So for instance, if there was a delay for whatever reason, we've had a severe winter this year, so if storms delayed an appraisal and so forth, if the commitment is subject to something that's outside the buyer's control, well, it's very important for that buyer to communicate that matter to their attorney as well as to their buyer's agent, so that we can get a little bit more time. So if there's time that's needed to complete that appraisal, then we can ask the seller for an extension to that period so that the buyer's deposit is not in jeopardy.
Okay.
So that's my take on commitments and the need to have them clean, because if you go beyond that mortgage contingency date and something goes wrong, meaning if that appraisal wasn't done and the buyer rolls the dice and says, oh, I know it's going to appraise, it's not going to be a problem, and then a week later it turns out that for whatever reason the appraisal didn't support the purchase price, well, then the buyer's deposit could be in jeopardy. They may not be able to close, and then they could be faced with the drastic circumstance of having to forfeit their deposit. And that's not a position anybody wants to be in. Yeah.
What about extensions, and when it comes to, and again, this is kind of a finance as well, but rate locks? So say for instance we do have a situation where we have to extend on the finance commitment,
Sure.
and that kind of runs into either a rate lock or the closing or whatnot. Right. What are your recommendations?
Well, there are a number of reasons why a closing might have to be continued or have to be extended, and so depending on the reason, you handle it one way or another.
Yes.
So, for instance, if if in the course of a title examination on behalf of the buyer and the buyer's lender, there is revealed a title issue with the property that the seller needs to address, because it's the seller's obligation to convey to the buyer clear and marketable title at the time of closing. So if the title examination reveals something that's in the title that's going to prevent that from happening on the scheduled date, well, the seller typically has a 30-day window to continue the closing in order to cure that title issue, whatever it might be. But in that 30 days, sometimes you might have an issue with a buyer's rate lock. So under those circumstances, because it is a seller's issue, meaning that the seller is unable to perform,
Yes.
if the buyer's rate lock is going to expire during that extension period, well, then we negotiate an extension to the closing on behalf of the seller, but also we then negotiate compensation for the buyer so that the buyer isn't forced to pay to extend that interest rate. Because it's a seller's issue, you'd be looking to the seller to pick up.
And the lender could let you know what those costs are. Sometimes there's no
Absolutely.
cost to extend.
Right,
Okay.
Sometimes it could be, an XYZ number of dollars for a certain period of time.
right.
And, when it does happen, usually your lender can let you know what the costs are, so it could be relayed onto the sellers or to
Right.
the buyers.
You don't just
aware
make
of it.
those numbers up.
No,
Yeah.
no.
Yeah.
Turn to Chris and figure out exactly what those costs are.
Hopefully
Perfect.
zero, but you never know.
Perfect. All right, so we've gone through financing. Now we're getting down to the closing stages. So we have our final walkthrough,
Yes.
and then we go on to closing.
So hopefully everything goes well for the buyers at the final walkthrough. That's their opportunity to take a look at the property, make sure that the sellers moved out, left the property in broom clean condition. Present company excluded. We'll assume that the movers didn't make any, cause any damages to the property, et cetera. And if the final walkthrough goes well, at that point, then we go to closing. And the closing process, as you know, is rather lengthy when it comes to the documentation that buyers have to sign.
Yes.
But in most instances, it takes about an hour, as you know. And really, what the buyers want to be concerned with that they're certainly getting clear and marketable title to the property, and that's the lawyer's responsibility to certify to them that they get clear and marketable title to the property. That the closing costs are in line with what was disclosed to them during the application process, and that the loan documents reflect those terms: the interest rate, the amount that they're borrowing, the closing costs, the repayment terms, and as I said, there's a lot of documentation to sign. I'm not going to sugarcoat it in any way.
No.
But
They have to come
it's all
prepared.
worth it, because at the end of the day,
You walk off with your.
they have a house.
They have a house.
And that's nice.
When you say clear and marketable title, can you just kind of elaborate a little bit what that means?
Sure. So it's the seller's obligation at the time of closing to deliver to the buyer what we refer to in the industry as clear and marketable title, meaning that there aren't any liens or encumbrances that affect the quality of that title. Massachusetts is a quitclaim deed state, which means that once you accept title to the property as a buyer, the seller's obligations end. And so it's very important for a buyer to be represented, and for that representation, their attorney, to conduct a title examination to ensure that any and all outstanding mortgages or other liens or encumbrances are completely satisfied either prior to closing or at closing, and to ensure that the sellers who are conveying the property to the buyer actually have the right to do so. That's an important thing, that the sellers actually have the authority to convey the property. That's kind of fundamental. So that's what we refer to as clear and marketable title.
Okay. And one last question. Declaration of homestead.
Yes. So recent changes in the state law regarding homesteads. Now, currently, if you own and occupy your principal place of residence, there's an automatic homestead exemption of $125,000 that arises by operation of law. And when you as an individual sign a declaration of homestead form and record that at the Registry of Deeds, that exemption balloons to $500,000 for individuals that own their home, up to $500,000. So if it's a married couple, for instance, the total homestead exemption would be $500,000. If you're age 62 or over, then that $500,000 exemption applies to each individual that owns the home. So you can have up to $1 million of a homestead exemption. And what that means essentially is that if, for instance, someone is sued and either because of a personal injury case or any number of reasons, if they owe someone money, for instance, if they have a declaration of homestead that arises by operation of law, obviously upon the sale of their house, they would receive the first $125,000 of equity in their property, and then anything available after that would be available to creditors. Now, if they record the declaration of homestead, as I said, that exemption balloons to $500,000. So if they were forced to sell their home in order to satisfy a judgment or a lien, upon the sale, they'd receive the first $500,000, and then anything after that would be available to creditors.
What's the cost of the homestead nowadays?
Homestead, I guess I can say this on television, but I don't charge for homestead drafting, but there's a $35 recording.
It's a lot of protection for a little bit of money.
It's a $35 recording fee that's payable to the Commonwealth of Massachusetts to record the document.
Perfect. Thank you, Lou.
You're welcome.
Very interesting.
This concludes today's show. Thank you for joining us from the Faces of Melrose Real Estate. I'd like to mention that we are going to feature a local artist in each episode. In today's show, we have Abby Breyer, who provided some artwork from Follow Your Art, which is located here in Melrose. Please check out our Facebook page. Leave any comments or suggestions as to what you'd like to see in future episodes. Our next episode will feature Seniors on the Move. And please tune in on Thursday nights at 8, Saturday nights at 7, and Wednesday mornings at 11 o'clock. Thank you.